Article in The Australian by Michael Sainsbury, who's in fact on the ground in China. You asked for detail. He has included some, suggesting it's been announced, and it includes accelerating infrastructure projects, fresh subsidies for cars and electrical goods, as well as loosening of monetary policy. Obviously, that latter one in particular may be good news for the Australian market. Julia, your thoughts?
James, the source of this talk is the Shanghai Securities News, which is a state-owned news agency, which came out to say that China is on the verge of approving a 2 trillion yuan stimulus deal, or about 310 million Australian dollars. That will make it about half the size of that monster stimulus package that we saw out of China in 2008. And a key reason why Asian markets are moving higher today, we're seeing the Shanghai Composite up around about 1.2%, the Korean Kospi up by about 1.3%. Aside and as part of that stimulus package are the number of projects that we are seeing approved around China. And I guess the big one that the markets have been watching is that $11 billion project by Bayo Steel. Now, this has been waiting approval since 2008, and it does look like it's been given the green light. We've seen pretty much 3 large steel construction projects getting the go-ahead, so another positive there. And then, of course, the cash for clunkers deal helping the automotive industry as well. So this is for this is stimulus in terms of that car industry. So the fact that we are seeing some concrete details around what China is looking to do in terms of its growth policies, a massive positive for markets today. We did see the energy sector, the materials sector really outperforming. And as you'd expect when you hear news like this, you expect the Shanghai Composite and export markets like the Korean and the Australian market to perform the best. But funnily enough, it was the Taiwanese market which was actually the outperformer in the region today, up by about 2.9%. And that was really on the back of some measures that it announced that it will be giving some of the traders a break in terms of tax. So that was a positive for the markets over there. But altogether, a fantastic session on Asian markets today.
What do you, whether or not we have seen that change in direction for sentiment?
I mean, I can see Kieran's point, and it's a bit of a tug-of-war between the policy responses that we are going to see because of the troubles that we are seeing in Europe, and of course the troubles in Europe. And today, the policy response that is expected out of China was really a positive for the market, but then the troubles in Europe haven't gone away as well. If we have a look at China, it is a key driver of the Australian share market, and I guess during the global financial crisis, at the height of the market in 2007, we saw trade surplus in China about 7.5% of GDP. That's down to around the 2% level now. So China is a lot more reliant on domestic consumption. And I guess this stimulus is designed to try and stimulate that domestic consumption. But it does come straight after the World Bank has warned China that more stimulus could cause further imbalances in the Chinese economy. So it's quite interesting what's happening here, a bit of a tug-of-war. And I guess in terms of Australia, is China's growth going to be important, or the troubles in Europe? And the troubles in Europe now are starting to focus in on Spain and the banking problems over there. So a bit of a tug-of-war today. The expectation of stimulus from China did win the day, but by no means are those troubles in Europe over, and so the volatility in the market isn't over either.
A couple of levels he's watching before yourself. I mean, what are you looking at in the charts?
I mean, yesterday we were talking about the market being oversold, and the market in the last couple of years only being at this level in terms of the relative strength index now for the 3rd time in 2 years. And whenever we have seen the RSI at these very oversold levels, we have seen quite a violent bounce back in the market. The first one was about 100% bounce back of the losses. The second one was 66%, and now we're looking at this one. Typically, technically, the 50% mark is an important area, and that would take us to 4,230 points, or around about that mark. But all up, if we have a look at what happened after those quick bounces, well, the first time we continued on that downward trend. The second time we looked at it sideways. So after this technical bounce, it's really going to be determined by what the market sees in terms of Europe and what's happening in terms of global growth.
Get back to a little bit in the show. I just wanted to get finally, Julie, your thoughts. It's a stock we don't talk about. And, you know, I think it's perhaps one we should, because it does, it represents quite a significant, I suppose, portion of the market in terms of growth. But Aquarius Platinum having a pretty good session today. Why?
A pretty amazing bounce back. The stock was up by a massive 15.5% in one session, and there was really no news to speak of from this company. And having a look, at first I thought it was tied to that cash for clunkers program out of China, which would help things like copper, aluminium, and of course platinum. If we have a look at platinum, a key driver has been the car market, and for the first time in 4 years, we have seen the supply from mines actually seeing a drop at a time when we're seeing record car sales. But altogether, it does look like it's been more that we've seen such a drop-off in the last month. We have a look at stocks like Aquarius Platinum, which is down 50% in the last month. Link Energy, Cold Spur, these are stocks which are down by 37% in the last month, and they were the best performers today. We saw Aquarius Platinum up by 15.5%, Link Energy up by 15%, Cold Spur gaining 9%. So it does look like the underperformers in the last month seeing the biggest rises today.